I've been getting a lot of questions that people asking how to really grow a small account. And yeah, I have came there from before. I started a little bit higher, but people want to ask me, well, what if I have only $3,000 or $5,000? I'm under PDT and I can't really trade that much. So what do I do after that? So there's a few ways that I came up with. So first, you need to choose the right broker. There is Interactive Broker that I started back in 2016, and you can start with TradeZero. You can start with SureTrader. I think they accept the account under 25,000. So SureTraders and TradeZero, they both have really good shorts availability. And if you're over $30,000 account, you can choose either Cobra Trading, Centerpoint, SpeedTrader, and whatever brokers you think is the best for you. So Interactive brokers that have really cheap commissions, so you can use it for dip buying multi-day breakouts, and I think it's the best suit for going long on a stock. Now for short availabilities, I would say SureTrader, SpeedTrader, SpeedTrader Pro, Centerpoint, or TradeZero. So whichever you think is the best, choose that one. Let's talk about accounts that is around 3,000 to 5,000. Now for the best recommendations, I would recommend Interactive brokers. So you don't want to figure out how to short yet because you don't have that much opportunities to waste, and you can't really afford that much mistakes at the beginning. So first you need to find a really consistent patterns. I'm talking about even though they don't happen that often, you don't want to go in full time with $3,000 to $5,000 account. You need to find a really consistent pattern that it have a consistent return, but it doesn't really happen that often. What I've seen is one of the best suitable pattern is dip buying a pretty, I would say, between a large mid cap to large mid cap. When they have a massive drawdown with a let's say multi-day breakout, and it's a multi-day runner. So let's say the market cap is around, let's say 1 billion to 2 billion. When they pull back about 20-30%, it's going to bounce. It's going to bounce at least 30 to 25%. Now that kind of pattern, it gives you really consistent return, but it doesn't really happen that often. I have tracked about a year. They happen about, well, I would say 10-20 times per year, but they all have really good consistent return. So you can basically make about 20 to 30% in one go. And with a small account, a lot of people want to rush in and make a lot of money. You can't do that. You have to slow grow your account into the most comfortable zone, which is around, I would say, 30,000 to 100,000. If you are into that area, it's really easy to make, I would say, $500 a day, $1,000, maybe $10,000, sometimes even $20,000 per day. But with a small account, you need to be patient, and you don't want to go in full time at the beginning. Find a really consistent return pattern, and make sure you get that 20 to 30% for those 20 opportunities per year. Now, for the last, there's really important thing I want to emphasize is your risk management. Now, I went through the $5,000 risk management, so let me give you a really specific recommendations that I came out with. So first, if you have a $5,000 account, the total position should be around, I would say, 700-ish, and your risk will be around $50 to $70 per trade, and you're looking forward to make $100 to $150 per trade. Now, it seems really small at the beginning, but once you start rolling and you can snowball that, each time the percentage of your account you pull out to risk per trade will increase, and that will also increase your profit as well. And since you have a really consistent return and consistent pattern, it will be slow, but you can grow your account really steady. And once you get into that 30,000 and you're over PDT, your profit curve will increase significantly. So to grow a small account, don't be rushed because you're under PDT and you're seeing a lot of people making money. You have to focus on yourself. Focus how to improve yourself, how to improve your mistakes, because end of the day, people who are making money, who are losing money, it is you, it's not other people. You can learn from somebody else and you can listen to recommendations, but always trust your own judgment. And always be patient. Don't get emotional. At the beginning, you don't want to risk too much. Just find that one pattern that works. Be patient, wait for it, and get the execution better and better. Now, once you grow into the comfort zone and start learning into other strategies, and you always have this consistent return pattern to back you up with the mistakes that you will discover or try out on the new patterns. So that'll be all, and thank you very much, and I will see you guys next video.